Hey guys, like I said, doing the second video for the Chapter 1 homework problem 2 for tax. So in this one here, we're still going to be dealing with Chuck, but we're going to be finding the marginal tax rate on this one. So I've already got the problem kind of set up to save us some time. So the $79,000 is his income. Then he's got $14,700 for the interest off of the city bonds. And then what we need to find is if he earns $40,000 more, what will his new marginal tax rate be on that income? So in order to do this, you've got to determine the old tax rate for the $79,000. So we're going to start off, and we're going to use that same method that subtract, multiply, add. And we're going to have the 79,000, and we're going to go back to our table, and you'll be able to pull up that tax information for the single payer, and that's going to give us the 22%. So we're going to subtract the bottom of that tax bracket, so 79,000 minus 41,775. That's going to give us a remainder of the 37,225. Then what we're going to do is we're going to take that 37,225, that part of his income, and that's the base, and we're going to multiply it by the 22% of the tax rate. Then that's going to give us his tax amount, which is, or this portion of the tax amount is $8,189.50. Now we're going to come down and do adding. We're going to take the piece from the tax bracket, the $4,807.50 plus this $81.89.50. Then we're going to get $12,997. And this one here is the old tax. Okay? Now, this is the step 1. Step 2. Now we got to find the new tax. So this is going to be the tax of what could be if he earns $40,000 more in taxable income. So we have to then determine what that amount is. So 79 plus the 40, that's going to be 119. You'll go back to your tax brackets, you'll look there, and you'll find that. We're going to continue to use the subtract, multiply, add method. So we're going to take our new income, 119,000 minus the bottom of that tax bracket, which is the $89,075. That's going to give us the, $29,925. We're going to use the tax rate of 24%, which is going to give us $7,182. Coming down to your adding, so we're going to use $15,213.50. That's going to come from the tax bracket paper, the government, and then I'm going to add the $7,182 that we found. Going to give us our $22,395.50. This is our new tax. And then the third part here, number 3, is to actually find the marginal tax rate. And that's going to be the change in tax over the change in tax income. Okay? So that means new minus old on the tax on the numerator, and then new minus old on the tax income. So what we're going to do is we're going to come down, and you'll have $22,395.50 minus, so that's right here, there's your new tax. And then we're going to subtract out the $12,997, which gives us $9,398.50. And then on the denominator, we'll have the 119 minus 79. And then that's going to give us that $40,000 that he's going to make. When you do the calculation on this, should give you 23.5% as the marginal tax rate. Now, it said basically the part B of this problem says like if we went the other way. So instead of getting more income, if you actually ended up with some deductions and got $40,000 in deductions. So we're going to keep this portion here because we've already found that, right? But then we're going to come over and you're going to still do that whole subtract, multiply, add, right? But instead, like we don't do that subtraction here, so we're going to go to the 79,000, subtract, whoops. We're going to go ahead and do that subtraction. So we've got 79 minus the 40, going to give us 39,000. Now we're going to do our problem. So subtract then, looking at your tax bracket sheet, 39,000, you're going to subtract the $10,275, going to give us 28,725. We're going to multiply that by the tax percentage, which is 12%. It's going to give us $3,447. We're going to make sure that we add in what was from the tax sheet. It's going to give us $4,474.50 as his tax amount. Then we're going to come down and we're going to do the marginal tax rate. So the marginal is the change in tax over change in tax income. Whoop, there we go. So if you, I'll take a picture of this too and post it. Makes it a little bit easier maybe for you to see because I'm standing half in the front of the board. But it'll be the new, which will be the $4,474.50 minus the $12,997. And then the tax income change, the 39 minus the 79. So that's going to give us $8,522.50 over that 40,000. There are some negatives in there, but they cancel, leaving you with a positive percentage. Gives us the marginal tax rate of 21.31%. So like I said, I'm going to take a picture of it. I don't know if you can pause if you need to. But let me know if this helps you. Let me know, and we'll try to work through it together if we can.